Contrary to popular belief, manual trading is less common. In fact, algorithmic trading bots have so completely dominated the financial sector that they now control the majority of Wall Street activities. Aside from cryptocurrency, practically everything is now purchased and sold using algorithms, including shares, bonds, and foreign exchange. In today's video, we will learn about the advantages and disadvantages of automated crypto trading. At Finance Doc, we will be sharing more explanation videos related to cryptocurrencies, trading, forex, and many more. So watch this video till the end and hit the subscribe button and click on the bell icon to get notifications for our future videos. So let's begin the video. Is crypto automation legal? In any country where cryptocurrency trading is legal, using a trading bot is not against the law. The usage of bots is widespread and well regulated in the conventional financial sector. Many stock trades are now carried out by machines, and cryptocurrency trading is no different. A bot is just a method of trading that doesn't require a person to carry out the deals manually. It is not illegal. There are a number of restrictions on this, though. Crypto bots can range from straightforward scams to those that employ dubious methods that might be considered immoral or illegal. Examples of this include pump and dump schemes and sending customers to unregulated brokers who might steal your money without providing any goods or services. These bots may be using methods that are against the law. It's how well they work, not if they do, that's the issue. The platform and bot used, as well as the user's level of skill and experience, all have an effect on how effective they are. Advantages and disadvantages of automated crypto trading. There are several advantages to using automatic crypto trading. Some of the most notable benefits of automatic trading include the ones as follows. Minimizing emotions. By automatically closing deals after the predetermined trade parameters have been satisfied, automated crypto trading systems aid in the regulation of emotions. Traders won't hesitate or second-guess their choices if they do it this manner. Cryptocurrency trading bots aren't just for timorous investors. They can also help people who tend to overtrade by buying and selling constantly. Backtesting. Using historical data, automated trading systems can be backtested to provide simulated results. This approach enables for the refining and improvement of a trading strategy before it's placed into active use. The rules for any automated trading system must be explicit and devoid of bias. The computer needs clear instructions on what to perform because it cannot make assumptions. Traders can check these parameters against historical data before putting any money at risk. Backtesting is a technique for testing trading ideas and figuring out the expectation of the system, which is the typical amount a trader may expect to make or lose for each unit of risk. Preserving discipline. A market upswing presents a tempting opportunity for impetuous behavior. By adhering to the trading guidelines established by their strategy, traders can conduct their transactions methodically even under erratic market conditions. Following these guidelines can help traders avoid costly errors like chasing losses or engaging in transactions without a clear strategy, improving order entry speed. Trading algorithms for cryptocurrencies can watch the market and place deals more quickly than humans. They can also respond to market fluctuations considerably faster than a person can. In an erratic market like Bitcoin, Diversifying trading. Users can trade multiple accounts or different trading techniques simultaneously using cryptocurrency bots. Traders can lower their risk of loss by diversifying their portfolios by investing in a range of assets. A computer can efficiently complete tasks that would take milliseconds for a human to complete. Automated crypto trading platforms are made to seize any and all potential lucrative trading chances. If you like our videos, please hit the like button and share. If you have not subscribed to the channel yet, please subscribe to encourage us for bringing in more interesting videos for you. Disadvantages. Although automated crypto traders have many advantages, there are also a number of disadvantages to the practice, such as high startup costs. When building an automated trading system from scratch, it takes expertise and time. Not to mention that these upfront costs can cancel out any improvements the system achieves. In order to maintain the system functioning properly, ongoing operational expenses like hosting and virtual private server (VPS) services must be paid. Ongoing maintenance costs. Automated trading systems need to be regularly checked for issues including network outages, software updates, and unforeseen market occurrences that could interfere with trade execution. These costs could add up over time and lower profits. Lack of flexibility. Cryptocurrency trading bots are designed to adhere to a set of rules and are unable to adjust to shifting market conditions. This rigidity could lead to missed opportunities or bad trades. Mechanical failure. Including any other system, an automated crypto trading system is susceptible to technical issues like network outages, power outages, and data feed failures. These mistakes could result in an order being placed at the wrong price or quantity, which would be a loss. Is automated crypto trading safe? The design of the system and if deals are routinely watched over will determine how secure automated crypto trading is. They cannot, however, be established in place and left to handle market volatility and perfectly protect traders from losses. They might, nonetheless, be a dependable instrument that makes cryptocurrency trading easier by streamlining procedures and enabling hassle-free trading around the clock. They assist in preventing bad decisions, including losing money owing to human error or vice versa, because they are by nature dispassionate. Conduct thorough due research on the projects and platforms and always ask questions to dispel any doubts before you pay for anything or deposit money into a trading account. Otherwise, if you don't, you can end up losing money. Thank you for watching this video. If you like this video, don't forget to hit the like button and subscribe to the channel so that you don't miss out on our upcoming videos.